Yes guys, Jess here, back with another video. You read the title. You can see Bitcoin's actually been bleeding towards the downside. We've actually been creating lower lows and lower highs. We've just been chopping around and a lot of market participants are getting bored. You can see the liquidation heat map is showing orders being piled up on both sides. We have liquidations on the top side and the bottom side. If we actually zoom out to the 24-hour to just see what's been going on the day, you can actually see that Bitcoin has actually been piling up a lot of liquidity to the downside for the short term, and there's some piling up on the top side. So we need to be looking what is likely to be happening next. We can go on a 3-day liquidation heat map and actually have a look at the orders, and you can see that there's a bit below us again, but the majority is still to the upside. So I think this is the final warning that I do have. You know, we can have a look at the Bitcoin funding rates, and we can see that the Bitcoin funding rates are actually negative on Bybit, and you can see that the funding rates for all the coins are slightly negative or very low. So in my opinion, this is the time to be paying attention. You can see the long to short ratio is actually skewed towards shorts. A lot of shorts are actually piling in now, and I think this is the final warning before we actually get a massive short squeeze. So before we get in towards the analysis, make sure to smash up that like button. Let's try and get above 25 likes this video. That'll be absolutely insane. And with that being said, let's get straight away in towards this banger. Bow. So for the imminent short term, you can see Bitcoin has just been bleeding, and you can see that the fear and greed index has been oscillating from fear in towards neutral. Market participants are actually getting bored and slightly fearful as Bitcoin is actually bleeding. However, you can see that we're trading within this falling wedge. So we had our move up in towards the inauguration, and ever since then we've just been bleeding towards the downside. We've had tariff news, we've had news on CPI recently, we've had a lot of bearish catalysts causing price to come to the downside. However, we're not exactly crashing and losing our main support level in our range lows. So again, as long as we're actually still maintaining this, you know, structure in the short term, I do think it's more likely we can get at least a short term bounce anytime from now. So within the next week and a half, I would actually estimate that it's likely we can actually get a short term relief bounce, and then from there we can actually see if this short squeeze is going to be a lower high before we actually crash towards the downside and potentially actually shake a lot of participants in the market out. But I think with the funding rates being so low right now, it just doesn't make sense for us to actually start crashing towards the downside. I do think that the funding rates right here are quite low. A lot of participants are getting too bearish. So for price to just come down after consolidating in a, you know, a falling wedge doesn't look likely to me. I think a short-term bounce is definitely imminent. So that's what I'm looking at. So you can see this chart has been holding up ever since December. I've been covering it on the channel, and we're actually at our range quarter right now. So we've been traded within this range, and if we zoom in, I've taken it from this low on our previous spike towards the downside, and then our high, and you can see that we're trading in and around the golden pocket Fibonacci, and we're still holding this level a week later since I started covering this in and around the 7th of February over here. So we've been just spiking in towards this level, and it looks like there's a player actually loading up on their positions. If you're seeing price action like this and you're seeing failure to break below, you know, we had that CPI news, we front run the yearly open just around 93,400, which I'll cover in a second. So you can see on this chart, the yearly open just below that wick there. We've actually just been maintaining this level and not breaking below that yearly open in 786. So in my opinion, I do think that it's still likely we can go towards the upside. Failure to break below the level indicates exhaustion from the bears. It indicates buying pressure from the bulls, you know, the institutions perhaps, or a player in the market that wants to actually load up before the next major rally. And typically when you see something like this, especially for example in a meme coin, you can actually observe this and test it for yourself. You can see that if you have a lot of wicks and you're holding the level, it's likely that the rally that the person that's actually bidding is expecting is not going to be short-lived. It's more of a sustained rally. So that's interesting to actually note. I do think that there's somebody accumulating, and there's going to be a rally very soon. So I do think that this is a sell the news, and we're likely to see at least a bounce in towards 108k level, and then from there we can actually identify if that's just going to be another lower high and we're still capped below the range highs, and then maybe we can get a move towards the downside. But for the short term, I do think that a bounce is imminent. So you can see that I've actually used this green box to actually highlight the past week and a bit of price action, and we've just been, you know, trading within this small range. Like, this is absolutely insane. This has been very choppy. You know, a lot of participants would have been shaken up by now. I think we're near the stage where this is the final warning before we actually start moving towards the upside. We have a potential bullish checkmate underway. So you can see I just looked up the bullish checkmate, and when you're on a support zone, you have failing momentum, lots of buying pressure, it actually indicates a bullish reversal that's actually happening. And of course, this can happen at range highs too if you invert your chart and it shows distribution. But right now, this is an accumulation pattern and it's indicating that the bears are actually losing steam. So in my opinion, if you can get a daily candle close above 97,900, so above these highs here, I do think that we're going to quickly reclaim December's mid-range and actually start moving towards the upside. Now, another reason why I want to see candle closes above that region is because you can have your 9 and your 18 exponential moving average as resistance. Ever since we lost the moving average, it's just been capped below it. We've been spiking into it so many times, but you can see every time we spiked in towards these moving averages, we had a rejection. But of course, that was when we had a bear moon. But right now we had a bull moon. We're holding the support quite nicely. We are trying to actually reclaim the previous week's mid-range. So I think a candle close above these highs and reclaiming the EMAs and potentially pushing in towards the mid-range and holding that level would actually indicate we can get a reversal. So for me, I want to see a candle close in a daily time frame above 98k to actually see if we can get that rally towards the upside. Otherwise, we're still ranging and forming this accumulation pattern where I do think that a reversal is likely. But again, if we accumulate too long and we spend too much time, you can actually interpret this as a bear flag where you had the previous move down, too much of a consolidation, and that actually leads to another move towards the downside. If that was the case, you have your 21-week exponential moving average and your previous week's low where typically you sweep the lows before actually reclaiming it and actually going higher. So that's another scenario where maybe the CMA gap does not get filled, and that's another bear trap. So again, it's about, you know, using the different pieces that the market is giving us and filling the jigsaw ourselves. We have to just be looking at the information and be coming up with a conclusion when the time comes. Of course, there's a lot of moving parts. You know, data will refresh by the time we get to that support level. So again, it's something to watch for, but it's not guaranteed for it to happen. So in my opinion, I'm just watching this range quarter, and if we actually manage to continue to hold this level, I do think that this rally is actually imminent. As soon as we get a candle close above 98, then I think that, yeah, we can actually see a reversal, and potentially we can see if we have enough strength to get in towards new all-time highs. This is the bottom phases, in my opinion. You know, we had the liquidity sweep, we're forming another higher low, so it's possible that this is the start of a new trend where, you know, market participants will be shaken out. You know, we're converging in towards one point, so you can see it's likely we get a breakout soon. So we need to just be keeping a finger on the pulse and seeing what's happening. So yeah, that'll be it for me. Make sure to be following me on Twitter to be staying up for consistent updates. I'm just covering Bitcoin today, but tomorrow I will look at Ethereum and look at the Bitcoin dominance in a bit more detail. But yeah, make sure to be following me on Twitter. I'll be updating you guys on here about things in the market, especially tomorrow. So yeah, I'll see you guys in the next one. Have a blessed rest of your day. Peace, guys. See ya. Bye-bye.